Welcome back. You're watching HFO-TV. HFO-TV is co-sponsored by the construction, repair, and restoration firm J.R. Johnson, the real estate law firm Baljanik LLP, the tax deferral accommodator Butler Exchange Group, the mortgage banking firm Gantry Incorporated, and forensic building consultants providing building structural science services.
Welcome to HFO TV. I'm Greg Frick, partner at HFO Investment Real Estate. And today we have with us Jack Stevens, one of our senior brokers at HFO. Thanks, Jack, for coming.
Thanks for having me.
You're welcome. We're going to talk a little bit about what he's seeing in the market. It's been a crazy last 15 months. We're still kind of getting out of this COVID pandemic and how that's affected from operations to values in his market. So again, Jack, thanks for taking time. I know it's been a crazy year.
Yeah.
Maybe talk a little bit about kind of the impact you've seen in your market with COVID. It started in March of 2020. We're sitting here, end of second quarter of 21. What have you seen on the apartment side in terms of what COVID has done, both operational? Let's get into that first, and we'll talk a little bit about valuations.
Yeah, I think operationally, it's a pretty big answer to the question.
Right.
Some properties haven't been hit at all,
Right.
And that's great. I think that there are certain things some owners have done and reasons why they aren't hit as much. It can be either locationally from the management side or just frankly luck. Other properties have been hit. We've seen as high as 50-60% delinquencies at some properties.
At some point in the
right,
pandemic.
exactly.
Yeah.
I think overarching, people have been able to pay rents at a much higher rate than we expected.
Right.
When this all first started, I think we, kind of planned for the worst, hope for the best kind of situation. But no, it's been hit hard. Portland specific, kind of outer east side, has definitely been hit harder than a lot of the other markets. I know that even in the close-in markets, a lot of the new construction has had way more problems with lease-ups,
Right.
Which I think is a direct relation to that as well.
Which may be a combination of pandemic as well as just the lack of supply that came on. So
exactly,
yeah.
And everything going on in Portland. When you get out to the suburbs, it's really hit or miss. It's hard to say specifically if you drive by one property if it's going to have a lot of problems versus another property.
Right.
But all in all, I'd say it's better than expected, but can still be really bad for a lot of owners right now.
Okay.
But yeah, it's we're probably running on average market-wide somewhere between 10 and 15%.
Depending on where the property is.
Exactly.
And the uniqueness of your building and the demographic that's in there.
Yeah, I think the only correlation you can really pin it to is generally the higher the rent, the better collection, the lower the rent, the not quite as good collection. In terms of the market rent, properties where rents are artificially low and owners haven't increased rents for a long time, they tend to have better collections because people don't want to lose that opportunity.
Right. What do you see? You've had talked to a lot of owners every day, investors in this market. What's kind of been their biggest pain point in dealing with where we are today? I know there's a lot of legislative issues, just the uncertainty on COVID. What are you hearing, or what's kind of the sentiment from some of the owners you deal with?
I think just uncertainty is kind of the blanket answer on everything. Whether it be legislatively with COVID going on, what's going to happen with the economy, the potential changes with Biden's proposed tax plan. It's just nobody really knows what's coming next. And whatever it may be, if it's, capital gains rates going up, or if it's delinquencies are going to go higher, or if, the moratorium is going to end on this day, or hey, this is what the assistance is going to look like. It would be really helpful, I think, for a lot of owners to just know, whether it's good news or bad news, once you figure out what it actually is, you can make a plan for it.
But not
and
knowing.
Right now, everyone's kind of scrambling. Some people have applied for the relief, others haven't, because there's a lot of uncertainty. If you alert all your tenants you're going to apply for the relief, that then they say, okay, well, we're just going to stop paying for the duration. And
Which
we don't
we've
know
seen.
how long
I know a
that's
lot
gonna
of
be.
owners have seen a tick up in the amount of rent that's not being collected since this quote landlord fund. I like to call it a property, a tenant obligation fund.
Yeah.
But as that, I think a lot of the misnomers, a lot of tenants think, oh wow, everybody's going to get paid. There's $150 million that's going to go out. Why am I paying rent?
Right.
They talk to their neighbor. Why are you paying rent? And then having to ask a tenant for an affidavit. So I know from a ownership standpoint, it's been very tough to try to navigate what to do.
Well, just the uncertainty of what tenants would actually qualify, what wouldn't, how to get all the affidavits signed. It's a really difficult issue to tackle. In an ideal world, I think for the majority of owners, if you were to say, hey, eviction moratorium, everything ends tomorrow, but we're covering 80% of all past due rents. There's no evictions allowed. I think a lot of people just take that because then it's okay, kind of reset, we move forward from there. But the way it's written, the
uncertainties is
kind of,
and how you get it and all that.
Yeah.
On the, going away from operations, I mean, what are you seeing on the kind of the investment demand side? I know when we started this in the pandemic, started this in March. I mean, we had the initial oh man, we're going to see delinquents go up. Are we going to see investment dollars, kind of wait on the sidelines, coupled with what's going on, legislatively in Oregon? I mean, are you seeing a slowdown, or has there been any surprises in this from where we were March of last year to where we are today?
Yeah, I mean, initially there was definitely a huge slowdown. Just, again, back to the uncertainty.
Right.
I think there's still a lot of uncertainty out there, but people can at least see the light at the end of the tunnel. And so they're anxious to get back out there, take advantage of the low interest rates. I'd say the one exception to that is Portland.
Portland proper. Portland within
the city of Portland
right.
specifically. And I think whether that's fair or not, there's a certain perception of the city and their government and what they're going to do about everything going on, and there's a lot of uncertainty and fear there. But outside, I think we've seen an increase, and it's probably been more so in the last 3 to 4 months.
Yeah.
Of demand. I think people are just, hey, we've been on the sidelines for a year, we're done with it, we have a lot of capital saved up, it wasn't as bad as we thought. Interest rates are unbelievably low. Let's go deploy that
let's
capital.
Let's go do some let's transact and do something. Yeah.
Yeah, exactly.
Yeah. And I've actually started to see people actually trying to do, come back into Portland, thinking based on where it is, if people are going out from the investment side, do we go back in? So it's been, I think we were down about 25% in total sales in the area for 2020. A lot of that was second quarter with COVID, but I think transaction volume is stronger than I thought it was going to be based on where we were in April.
Yeah, and even in the city of Portland, I think core, well-located, well-maintained properties are still doing pretty well.
Right.
People are not as anxious to take risk and go after properties that may need a lot of work or whatever may go into that. And so I think as long as you have a core, well-maintained property, it's still pretty good. But the rougher areas or where there's higher delinquencies, they're still definitely feeling the pain. Luckily, the delinquencies for most people haven't been as bad, so there's no fear of potentially losing the property, and that's also changed their motivation. So they're not as motivated to actually sell, so the prices really haven't dropped much in Portland. There's a lot of arguments for why it maybe should have, but it hasn't. So I think that'll be kind of the balancing act of when those markets recover a little bit. But
so with the change that we've talked about with kind of the uncertainty, has that changed how you have to do business? I know from my standpoint, it seems like we're doing a lot more. I mean, we've done this forever, kind of what we do our businesses, kind of consulting and advising. Are you seeing more of that either as the baby boomers that have had assets for a long time, what are they going to do? How does this fit with the tax plan? Do I want to deal with management? I mean, are you getting more of those conversations or?
Yeah, I mean, I think transactions, it's not a transactional conversation as much as it used to be for sure. It's much more of a what makes the most sense for you.
Yeah.
And in a standard market where everything's running along smoothly, it's easier for us to have an idea and make recommendations on, hey, this kind of makes sense. Now it's much more collaborative of, hey, look, here's where you are today. Here are the various things you could do. Every different client's going to have a different answer on what makes the most sense for them. And so I think it's more, telling people and advising, have that conversation with your family. What do you want things to look like in a couple of years? Transactions are still up. You can still do 1031 exchanges. Who knows what happens with that. But you can still make a plan of action and do something right now. And you really should. And, if that's keep your building in refi, if it's keep it, we're happy, that's great too. Right. But it's just much more of an in-depth conversation on what may or may not make sense.
And I think that's from our standpoint, I think from the company we've seen, I think COVID is, as I tell people, has compressed these kind of life plans from what used to take 5-10 years.
Right.
I don't know if it's because people were sitting with their families, stuck in a house all day, if it was, where I want to be, has maybe some self-reflection, but it seems like conversations that we have with clients that I would have thought would have been over the next 5 or 10 got compressed in the last year and a half.
Well, the city's helped a lot with that, with all the regulations and the pain of management. I think a lot of people who self-manage, that's totally shifted that around. Right. And a lot of people are moving. I mean, a lot of people want to move out to whether it be the suburbs, have a little bit more land. Out of state, Idaho, Washington, whatever it may be. A lot of people are kind of taking a step back. And, when there's a huge global pandemic, it's more of a, hey, what is really the most important thing to me? Do I really want to spend all this time on maintenance, or do I really want to deal with this? And, I think people are kind of shifting their life goals around, which obviously their assets have a huge part to do with it. Right, which then we bring us in for advice or just kind of pointing in the direction or showing them what opportunities are out there. Or just talk about what other people have done. Right. I mean, I think there's a lot of people have done things a lot quicker in the last year and a half than we
Yes.
thought, like you talked about. And it's, this family who's owned these 4 properties for the last 30 years, all of a sudden it's, hey, you know what, maybe I don't really love managing. Maybe I want to switch out to something that's a little bit more hands off, and I want to go retire in California. And so great, that could happen, but there's just all different sorts of things that people have been doing. So,
But then on the flip side of that, we still, I thought we would have seen a slowdown in demand. But there seems to have been, I think we underestimated the amount of investment capital looking to get into this market. We've always been fueled by what happens in California. There's been more of an exodus of capital out of California. You've talked, we've got people that do stuff in Arizona. They're seeing the same thing. So again, even with the changing and maybe more people looking to get out, the backflow of people coming in has not affected the pricing, and that's what I think.
No, absolutely. And I think you've seen it a lot in single-family home prices. All of a sudden, every single house you see out there is over $1 million, and that was something that wasn't really around a couple of years ago. And I think there's a huge influx of fairly high net worth individuals who are moving into Portland who could fuel that next apartment demand surge. And with taking your salary and working remotely, that changes a lot of dynamics. So you're going to get a lot more California and bigger city wages moving into Portland, whereas they wouldn't have been able to before.
So in terms of the market and kind of the Portland PMSA, even with what's going on, politically, we've had many segments about that before. You get on HFO-TV, it's, kind of changing every week or bi-weekly. Kind of maybe shine some light on what people coming into the market, how do they look at it? We did have a big kick up in supply a couple years ago. That's kind of done. But are you hearing that sentiment that maybe it's not as bad as people think it is in terms of, the local news or the national spotlight on Portland?
Yeah, I think it's definitely not as bad as people think. When you come here, you can kind of see that. Yes, there's a huge uptick in homeless encampments and other issues going on in the city, but at the end of the day, we are still one of the cheaper major metro areas on the West Coast.
Right.
And people still want to move here. And I think there's a lot of advantages to doing that. I think the city's going to continue to grow. I think a big part of what makes Portland such a special city is all the dining and bar and restaurant options that you have. Obviously, that got hurt a lot with COVID.
Right.
But I would assume that's going to bounce back pretty quick. I think downtown's going to take a little bit longer with the expense of doing that. But I think especially on the east side, there's a lot of opportunity there. And so I think whenever there's fear that drives people to move out of something, there are people who have a different opinion and can not take advantage of the fear, but can move in and see the opportunity there.
So I think the messaging is for clients is to really reach out to your advisor, your real estate advisor, because there's a lot of things that need to be discussed and plans with kind of the changing landscape. So Jack, I want to thank you for taking the time to come kind of show tell people what you're seeing and what your experience has been, and we'll see you again on HFO-TV.
Our entire office specializes in multifamily real estate, making HFO the largest multifamily brokerage in the Pacific Northwest. Your success is our passion. Build your legacy with HFO. Call 503-241-5541 or visit our website at hfore.com for more information.